Good evening. If you're asking yourself, is this a recording? It's not. I'm David M. Torrence, Philanthropist and Investor. Welcome to the future. You'll see my face real soon, but for now, I'm here in the metaverse to welcome you to today's webinar. But more importantly, to illustrate the advancements of technology and how far we've come. Tonight, you will be introduced to the foundation of AI and the fundamental knowledge needed to build the thesis around how you can invest within the sector and industry. Grab your pencil or your Apple Pen and notepad, because this will be a revolutionary webinar. With that said, let me introduce you to my co-host, John Rowland.
Thank you, David. I appreciate the opportunity to be part of this unique webinar. As David said, my name is John Rowland, Barchart's senior market strategist, and I'm here just along for the ride for David and to help give him a little technical analysis support. So I'll send it back to you, David, and I'm looking forward to our discussion tonight.
Yeah, so am I. Definitely interested and definitely excited to have everyone here. So let's jump into things. Investment advice is for entertainment purposes only. Entertainment purposes only. Of AI and semiconductors, it starts here. It's very important that we understand that AI will usher in an era of innovation. See, traditional AI is what we're used to understanding, deals more with analytical purposes rather than creative. But what we have today is what we consider generative AI, right? And that's the ability to produce new content such as text, video, images, or compute code, right? We may currently see this in regards to ChatGPT, or maybe some of the apps that have come out recently on Instagram that are used to take our image, throw it on a different background with different clothes and attire. And even recently, a company that deals heavily within the creative world has partnered with NVIDIA. So tonight, I'm going to be asking you guys to participate a lot in that chat. So I want you first to name for me, what's the company that recently partnered with NVIDIA that deals a lot with creativity? And that's in the image and video space. In addition to that, I want you guys not to forget, please subscribe to the Barchart YouTube channel. Go ahead, hit the subscribe button. And while you're at it, hit the notification bell, because I want you guys to stay in tune for future content, webinars that will be coming out through Barchart. So with that said, I want to paint a picture for you. If things and companies were to disappear off the face of the earth today, would it matter? That's the question I want you to ask yourself. Would it matter? And to be honest with you, it probably won't. Like, if we think about it, if CVS disappeared, right, we'll just go to Walgreens. If Facebook disappeared, we'll probably just go to Twitter, probably, right? But this is the thing. Within the semiconductor space, if a couple of companies disappeared, the world would be set back 10 to 20 years. I want that to sink in for you for a couple of seconds. 10 to 20 years, the world would be set back if we were to lose a few companies within the semiconductor value chain. Now, I want to ask you, what companies are you currently invested in within the stock market? Go ahead and throw it in the chat. What companies are you invested in? John, I would like to ask you, what's one of your favorite companies right now in the semiconductor AI space?
That I'm in the only one that's in my portfolio right now would be the Google.
Okay,
Big G.
awesome. Great company. Now, to understand the diffusion of AI, you must put it in perspective of economics, right? And this is where I want everyone to pull out that pencil, that Apple Pen in their notebook. To understand the diffusion of AI, you have to put in the perspective of economics. And what do I mean by that? Economic cycles and innovation have an inverse correlation. they have an inverse correlation. And what do I mean by that? If you think about a roller coaster starts here and it comes down and it comes back up. When we're going down in economic cycles, such as maybe now, right? Last year we had a bear market. This year, analysts are expecting a recession. We have high inflation and other economic factors at play. When economic cycles are trending down, innovation is starting to trend up. And it's our jobs as investors to be able to identify that innovation that is going on. Because this is the important thing. When we're able to identify the innovation that is going on, what's going to happen is when the economy starts to recover, innovation won't go down. The companies that were on offense and that were innovating, they will catch a second wind and move parallel with the economy. And that is what will drive us into the next bull market. But not only that, those companies that were on the offense during innovation, they will drive and lead the bull market. So it's really important that we're here to be able to identify the companies that are doing such that. Now, with learning anything, as you know, language is always the thing. So I want to introduce a new language to you. So when I say semiconductors, if you hear anyone bring up the topic of semiconductors, all they're talking about is simply chips. And those chips come in many forms. One is maybe like a CPU, right? You could think of that kind of as like the brain of the computer. And then we have other ones like the GPU that deals more with graphic images on your screen. So to keep it simple for you, CPUs are a big V8 engine, while GPU, you can kind of think of it as like an electronic engine that's running parallel processes. And this is something cool that happens within the technology space. We did something cool. We put the GPU next to the CPU, and you won't believe what happened. The speed and workload increased. And that is what started the explosion to artificial intelligence. It was the emergence and the rise of the GPU chip. That's very important in terms of understanding the space, where we came from and how we got here. Now let's take it to another level. When we talk about the areas of disruption, here's a chart from 2021 that shows the semiconductor market share breakdown. So when looking at this market share, what I want us to see is that obviously network and communication leads. But if you can, throw for me in the chat. In the chat, as you can see, based on this chart, where are the areas of disruption? Where do we see areas of disruption? John, what's one that sticks out to you?
Right?
Say that one more time for me.
I said, obviously, network and communication.
Network communication as well as industrial as well, right? Those are huge areas of disruption. And then where most of the market share is network communications. But this is the thing, as I spoke about, right? We had traditional AI and this generative AI that is reaching a lot of industries. The one that I'm most interested in is how AI semiconductors will integrate with the healthcare sector. And the reason that is because 2020 really showed us that healthcare has a big room for disruption and how technology can complement that. And not only that, there have been tea leaves dropped for us to follow as investors. Last year, Microsoft acquired a healthcare company that deals with AI. So again, in the chat, I want you to do a little research for me. What company did Microsoft acquire within the healthcare sector that's already dealing with AI? And this is really telling because, as I said before, if we're taking into understanding the economics at play and how innovation is right now at its peak, right? The companies that are doing the work and going on offense, those will be the ones that have the competitive edge going into the next bull market. So it behooves all of us to be able to identify not only the companies, but also the sectors that could take advantage of the market share that are being brought to them through AI. Not only that, the semiconductor space. So when we talk about the semiconductor space, one place we have to start with is understanding the supply chain. Supply chain is hugely important. And the reason that is because semiconductors is not vertically integrated. Semiconductor has something that we call horizontal integration. So we named some companies in the beginning, right? We had a screen that showed some companies. I want you to think of your favorite semiconductor company, and I want you to ask yourself, when it comes to supply chain, where does my favorite company fall in line with this diagram? For example, Micron. John, do you know where Micron falls in on this diagram?
I'm going to have to guess on this one, but I'm going to say it's a supplier.
Ooh, that's a really good guess. Yes, Micron is a Chinese supplier. It is. And AMD, a lot of people will think AMD is maybe a manufacturer. That's a common misconception, as well as NVIDIA. NVIDIA and AMD are not manufacturers. We will kind of consider them to be retailer or distributor. That's the lines that AMD and NVIDIA will fall in. And we're going to get to that really soon. But before, I want to break down the supply chain. So to keep it simple, before we even have a supplier, there's one other thing missing, and that is materials. So ask yourself, as an investor, right? If I want to invest within the semiconductor space or AI space, I don't have to start with the end product. There are materials that goes into the supply chain. And what are those materials? Well, one big material I can tell you is silicon. That's a huge material that's necessary. And then we have the supplier, of course. We have manufacturer, distributors, and retailers. And then from at the end, we get to the end user. And an example of that can be like an Apple Pencil, right? Once you have an Apple Pencil, what happens is used, the information is stored on how it's used. And then what happens is going back from not from left to right, but from right to left, we either the process starts again, we get an updated pen, or we get updates via software made to the pen. And that is very interesting because when we think of supply chain, we only think of it in terms of the product or the service. But another way in which you can think about supply chain is how also the information supply chain runs reverse, because that is how we get to a new end product or a new end development or updated software. So that's hugely important in terms of understanding the foundation of the semiconductor space is following the supply chain as your roadmap to how you can invest within the sector and industry. Huge gem there, because many of us only look to end devices. So next, where we're going to take things is looking at how the current model is set up. So when we look at the current model of the semiconductor space, it is horizontally integrated. Horizontal integration is the current model, and that's very important. So there's two types. Horizontal is the first, and that's where we're going to start. So it starts with an architecture. Architecture is a very robust part of the value chain when we talk about the semiconductor space, and it exists in terms of a ecosystem. It's called a CAD ecosystem, and that CAD stands for computer-aided design, right? So there are two major companies that are architectures within the semiconductor space. One is the one you see on the screen now, Cadence. The other is Synopsys. So again, we're talking about that supply chain. There are two companies right there that have a huge monopoly in the architecture of semiconductors. So what these architectures do is pretty much EDA software, electric design automation. It's a software that allows you to design a chip. So if I'm an engineer at Apple, I'm creating and designing a chip on EDA software. And there's two companies that provide that software and that technology to do that. Again, those two companies are Cadence and Synopsys, two companies you may not be familiar with, but I hope you're writing down. Then after that, we take things to our equipment suppliers. And one of the huge equipment suppliers are Applied Materials, a US-based company. And we also brought up earlier, John, we talked about Micron, a Chinese supplier. Another company that you should be aware of is ASML. ASML has a huge monopoly within the semiconductor space, and they're based in the Netherlands, as well as we have companies like Lam Research. But these are all examples of equipment suppliers. So they're providing the equipment needed for the chips, needed to make the chips. So that can be such as ASML provides the equipment needed to cut the lines onto the silicon where the transistors go. And we're going to get into that a little bit later. And then the next part in terms of the horizontal model, which is the most important, and that is the manufacturer, or known as the foundry. Now, this is huge. So I'm going to give you a quick story. Back in the early days of Texas Instrument, they had a CEO by the name of Morris Chang. Morris Chang was the CEO at Texas Instrument, and unfortunately, they kicked him in the butt and got him out of there. So what he did was he was like he was sitting there sulking, and he ended up going back to Taiwan. And when he went back to Taiwan, they spoke to him and said, "Hey, we know what you did before. We would love for if you can start somehow, making chips here so that we can start, manufacturing them." And to himself, he was like, I don't even know if that's really something I want to get into. I just got out of Texas Instrument. But he started reaching out to his contacts. And when he finally realized that for most companies, right, that were dealing with chips at the time, such as Texas Instrument, they had the EDA software, right? They had the architecture to design chips. But the big pain point for these companies, the real big, like, nail in their butt was having to create them. So he said to himself, well, how about I just become the company that creates the chip designs for all the other companies? And there's nobody else that does that. Hence how we get Taiwan Semiconductor. And that was hugely important because what that ushered in is what we know as the foundry model. The foundry model is basically TSM, and there's one other big player within the space, creating the chips for the whole semiconductor space. So when I talked about companies disappearing, if TSM was one of those companies to disappear, yeah, we're set back another 10 to 20 years. So the foundry model started there. And now I'll ask you guys again to throw in the chat for me, what's the company? And I'll give you a hint. The company's out of South Korea. What's the company out of South Korea that is also a foundry that creates chips for companies? All right. And again, that is our fabbing company. And that's called fabbing. Fabbing is when you are creating the chips, right? And then from there, we have the other three. We have an analog company such as Texas Instrument. And you can kind of think of that as a company that sells and markets the chips and other pieces of equipment to companies to buy, right? Think they're like the wholesale company for the chip sector, if you kind of put it in layman's terms. And then we have the ones that we all know of, which are the fabless companies. Those are your AMDs and your Intels of the world, as well as your NVIDIAs of the world. Those are your fabless manufacturing companies. And these are the companies that create and design specialized chips that are used for things such as gaming, right? AMD has a huge market share in the gaming space, as well as GPUs. That's NVIDIA, right? And they're also big in the gaming space because they create chips as well in regards to CPUs and GPUs. So these are the fabless manufacturing companies. And then we have, of course, our companies that just have end devices such as Tesla, which is one of John's favorite companies, as well as Apple. And we have other companies like Google, right, that John mentioned earlier as well. And this is really important because now we're able to see where within not only the supply chain, but this horizontal integration, where do we want to invest? And also we can see where AI comes from. AI comes from the architecture that's built, the equipment that's supplied, the manufacturing that's done for the chips. And again, putting these CPUs next to these GPUs, and that allows us to have a stronger workload that allows AI to exist.
David, let me ask you a question. So if we're looking, I mean, I love how you kind of laid this out for us in terms of, looking at this as a trading opportunity, and the trader in my mind starting thinking, if I asked you this question, if I was going to dig for gold, right, which companies do I want to invest in? Do I want to invest in the gold miners, or do I want to invest in the companies that sell the picks and shovels to the gold miners?
Yeah, exactly. That's a very great example and a good way of thinking about it, right? During the gold rush, who made more money? The people who were selling picks and shovels, or was it the people actually mining the gold? And that's how you can think of it here. Many of us are just looking to AMD and NVIDIA as our gateway, right, to the semiconductor space. But there's also all these companies that play a huge part prior to that we can look at. And again, John, the easiest way we can do that is through an ETF that's providing exposure to all of it, right? And I know we're going to get to that later when we go through some of the charts. So that's a very great question, but to investors listening, that's a very easy way to think about it, right? Do I want the gold? Is there more money in getting that one chunk of gold, or is more money manufacturing and selling the equipment needed, right, to get to the goal. Now, when we look at things in the current model, right, of the semiconductor space, we currently have vertical integration. Now, what existed before is what we know as, horizontal integration. What exists now, what we had before was vertical integration. And this is very important. There's a very strong reason of why I wanted to bring up vertical integration is because Intel, for many years, controlled the semiconductor market. They were our leaders for over a decade. And there's a reason for that. They adopted Moore's law and were able to get to things a lot quicker than a lot of other companies, right? They had competitors such as Texas Instrument, but they had a strong architecture. I believe it's called the Intel x86. There was their architecture equipment that provided all their chip designs. But what happened was Intel was vertically integrated. So what I mean by that is they had the architecture, as I said before. They also were the supplier for themselves. They also manufactured their own chips. So they were a foundry. Including that, they had their own catalog business and analog market. They were completely vertically integrated. Everything was done through them. Now you're thinking to yourself, that's a company I would like, right? A company that's doing it all and able to produce at a high level. But this is the thing, and this is where the fundamental knowledge and understanding comes to play. For a company that is strongly vertically integrated within the tech sector, it is a lot of capital expenditure, right? And resources that goes into maintaining that competitive advantage. So what we see over the long term is resources are going into maintaining what we do. Tech companies have one job. And like I said it before, during economic downturns, it's a tech's job, tech companies, their job to innovate. And what did we see, for example, we're keeping most recent. What did we see during 2018 going to 2020? We saw that Intel was not able to produce the 5 nanometer chip. And their inability to produce that 5 nanometer chip, when there was such a high demand and supply, when we started to have a chip shortage, it allowed companies such as AMD, NVIDIA, Marvell to start to steal market share. And since then, that is the tale of Intel. It's been losing market share literally since 2018, 2015, when they had a hard time producing that 5 nanometer chip. So that's why vertical integration is important, because I want you to understand the difference. There's a difference between vertical integration within your scope of work, and there's a difference between vertical integration within your industry. Intel chose to vertically integrate their whole industry into what they do. Now you have companies such as AMD who are acquiring companies like Xilinx. Xilinx was an acquisition that allowed AMD to vertically integrate within the scope of their own work. So guess what? The maintenance of Xilinx and their ability to merge to that company does not affect their ability to do research and development. And that is how you can control and maintain a competitive edge within the tech industry. You have to get mergers and acquisitions that allow you to vertically integrate within your work so that you can also do research and development to maintain the market share you have. But again, to kind of bring it back home, if you aren't aware of the innovation, if you aren't aware of these fundamental things that are taking place within the company and how they should look, it kind of puts you behind the 8 ball. And then you're not able to, number one, create a thesis. Number two, you're not able to properly invest because you're lacking key information in the key sector in which you're hoping to get a return. And not only that, you're missing a huge part that with horizontal integration, the margins are wide. The margins are really big because guess what? Companies aren't having to put all their time and resources into everything they can put into their specific scope of work. So I really want you guys to understand the difference between horizontal integration and vertical integration in regards to the semiconductor space and how it is beneficial that we maintain a horizontal integration, and that there is a company that wants to vertically integrate, that they try to integrate within the scope of work that they do, because if they choose to integrate within their industry like Intel does, they're going to have a hard time. Now I'm going to stop and give you another quick story. A lot of people don't know this. In 2009, AMD actually tried to do what Intel did by creating a foundry. It was actually called Global Foundries. In 2009, they tried to create a foundry. And I'm just going to let you know now, it did not go well. It was way too much work. It's a lot of work to produce these chips. It's not as easy as we think it is. Because what happens is when they were trying to create the chips and get that foundry started, they realized that by the time they got it up and by the time they're starting to create the chips that currently exist, Intel and other companies are already on to the next nanometer chip. So that was a huge competitive advantage that Intel had, right, with their foundry. But again, they weren't able to research and development to maintain that market share. So I think that's very important for us to understand. And that's going to lead us into our next topic. That's going to be very important and something that I want everyone to really get a baseline understanding and that is Moore's Law. Moore's Law is the law that governs the semiconductor space. And Moore's Law is simply this. The number of transistors and resistors on a chip doubles every 24 months. So simply put, every 2 years, the chips get better. That's it. Every 2 years, the speed and capacity increases every 2 years. Now, for those listening, can you throw in the chat and tell me what's the current nanometer chip that we're using? I want us to think about what's the current nanometer chip that's being used. I'll give you guys a few seconds to throw that in the chat. And if you don't know, John, do you know what's the current nanometer chip around?
5.
5, yes. And 5 is the current nanometer chip we're on. And TSM right now is actually working on the 3 nanometer chip.
So let me ask you something, David. This is what fascinating. This is way out of my scope of intellect. But is there a diminishing return, or is there an edge to where these chips can go in terms of about the size and how many transistors and that technology, or is this kind of an infinite process that just can, we keep having or doubling every 24 months?
Yeah, exactly. So you're right. We're kind of bumping up against physics, right? You said we're at the 5. The next is the 3. After that is what, 1? The question becomes, once we get there, what happens to Moore's Law? And this is a huge topic of discussion. Moore's Law is not a long-term. It's very scary that Moore's Law may not be a long-term principle that's a part of the semiconductor space. Because again, once we get to that, if we get to that 1 nanometer chip, what happens then? Right. So great question. We are kind of pushing the edge. And the question is going to be, how do we innovate outside of Moore's Law? That's hugely important. And I kind of want to break down the nanometer because I know a lot of people wonder, like 5 nanometer chip, 7 nanometer chip, 10 nanometer chip. Like, where does that come from? So to keep it very simple for you guys, there's a process called photolithography. Photolithography is the means in which chips are made. And what happens is there's silicon that's taken and there's an EVU high beam that is put onto these silicon wafers, and there's these lines that are made on them. And on those lines, those resistors are put in place. And then the distance between the lines tells you the type of chip you have. So there's a 10 nanometer against those between those lines, 10 nanometer chip. So there's 7 nanometer chip, or like currently now, the 5 nanometer chip. And again, for many companies such as Intel, they had a hard time innovating when it came to that 5 nanometer chip. So the question becomes is, in recent news, we know that Intel is building a foundry in Arizona. So according to Moore's Law, we know that every 24 months, transistors and resistors are doubled. So the question becomes, if it takes, let's say, 5 years for that foundry for Intel to be made, what chip will we be on, or will the technology be almost a decade old by the time that foundry is made? So it's important that Intel is hopefully looking to find how can we innovate outside of Moore's Law, right? And if you want to, throw in the chat some ideas you have that we can innovate outside of Moore's Law. And I gave us an example earlier, right? The cousin of the Moore's Law is called Dennard scaling. And we had that already, which is putting the CPUs next to the GPUs, right? That was one way we kind of simply innovated outside of Moore's Law. One of recently is the company Lam Research and AMD started to build transistors higher, known as 3D chiplets, right? So we also have that's being innovation outside of Moore's Law. And one big one that's going to be entering the space now, especially with AI, is specialized chips for data centers, because we have to have all this information that AI is using stored somewhere, right? So data centers and specialized chips for that is going to be really huge in regards to where innovation lies outside of Moore's law.
So, David, we got a question here. Is what about a half nanometer chips
Yes,
today?
yeah. So we were go to 5, 3, 1, and let's say we were attempt to go half. Well, again, the question becomes, what do we go, a fourth of a half? And again, we're kind of, that's to your same question, John. We're kind of pushing the edge of where we can go, right? And I would say that the goal for for the industry is not to find how can we squeeze in these nanometers. The goal is going to be how can we innovate outside of Moore's law, and that is what we all as investors should be looking to hear for, right? As well as see for it. So, for example, like I said, at AMD's last innovation conference, one of the big things that they displayed was those 3D chiplets, right? They were trying to show us.
Stacking the chips on
Yes,
stacking.
exactly. Yes, stacking them. They were trying to show us, hey, this is our innovation outside of Moore's law, right? And that was huge because that lets us know that they're innovating, right, to take us to the next wave. At the next innovation conference, we want to hear more dialogue about what they have coming up the pipeline. What other things are they looking to do? What other laws that I may not be aware of and may not be aware of that are coming up, right? That will aid to AMD maintaining its market share, and if not, trying to steal more, right? And to maintain it, their competitive edge, especially with NVIDIA and AI. AI is going to allow that. AI coming about is going to challenge these companies to get very creative in their ability to innovate. It's going to be huge. So let's bring it home, right? We went over Moore's law. We went over the current leading edge chip. And not only that, we have an understanding of what photolithography is, again, and that's that process of creating those lines in that chips. And there's one company, and I brought the company up earlier. There's only one company that supplies the equipment to create those lines and those nanometers, and that is ASML, the company out of the Netherlands. They have a monopoly on the equipment used to that. They're actually leading Moore's law, because without them, we won't be able to create the lines to create that nanometer distance on the silicon. So I want to take us to bringing it all together. So if I was an engineer at Apple, and I'm thinking about creating a chip design, it's simply going to work like this. I think of the design, I lay it out on EDA software. Again, EDA stands for Electronic Design Automation, and the two companies that are leading that are Synopsys and Cadence. And once I lay out that design, right, I'm going to send that design to my manufacturer, which is either TSM, and I was trying to get you guys to find out earlier, the second player in the space, Samsung, right? Those are the two main foundries within the world. And they're going to make sure that it can actually be made, right? They're going to confirm, hey, we love this design you made on the EDA architecture. Yeah, we definitely can make this. And what Samsung or TSM going to do, they're going to buy the equipment and all the supplies they need from ASML, Lam Research, or Applied Materials, or Micron, right? They have to go to China, and they're going to get what they need. And then from there, Samsung or TSM are going to create the chip, and then that chip goes to our end users, right? And in devices. And that will be companies like Apple or AMD or any companies that may be providing a service, right? And that's how we get our EV cars, our phones, right? Chips are huge also within the mining space for mining cryptocurrency, laptops, and also, as we're here to talk about, AI and companies like OpenAI, right? They're getting these chips from either AMD or other fabless manufacturing companies to put into, right, their algorithms and to put into their computers so that they control their AI. Now, I appreciate you guys for sticking with me this long, and I want to get us to the end, but this is where I really want to take the time to let you know about a piece of information that I don't think is being talked about enough. And I really hope you have your pens and papers out when I say this. AI is here. It's been here. and it's not going anywhere. But this is what I want you to think about. Where would the information be stored for AI? I said earlier, we have data centers that are using chips, right, to store information, data centers that are using chips to store information. But where will all that information be stored? And this is where I want you to pay very close attention to the innovation around DNA. DNA, for those who do not know, DNA is the ultimate storage molecule. It's very stable and easy to preserve. Because what you have to understand is that within the next 10 to 15 years, it's going to become very, very expensive to store information. Why? Because there's limited silicon, which means that there's may become a very high demand, low supply of silicon to continue to create the chips. But not only that, according to Moore's law, our chips at some point will only be able to process and work as fast, right? So if our AI continues to evolve, what's going to evolve with it to store the information and allow it to process like it does? And this is where an opportunity to capitalize on the emergence of DNA and the integration of semitech, right, to be the next generation of information storage. Now, for those who do not know, since 2021, there's already been a conglomerate of companies that have been doing the legwork. I would challenge all of you to do the due diligence of looking up the DNA Alliance. The DNA Alliance is a conglomerate of companies that since 2021, and there's some big names that you may recognize that have already been doing the work on DNA storage and information storage. With that being said, thank you. I appreciate you from investor to investor making the time to be here. This was a lot of information. I hope you took great notes. And most importantly, I would like to say thank you to Barchart for allowing the platform for this information to get to retail investors like yourself so that we can get a competitive edge and take advantage of this next bull cycle. And not only that, this next wave of innovation that we know will be making a tremendous effect on the world today.
Well, thank you, David. I think you gave us a lot of great information. And like I said, the trader in my mind is thinking of looking at, I'm totally looking at the space totally different from the way I perceived it before today's session. So, and I'm sure folks who paid attention will benefit as well from that. So that being said, what I thought we could do for fun here in the last 15 or 20 minutes is let's go and look at some of the markets that the stocks or companies that you talked about, and then let's just look at them from a technical aspect in terms of, is there opportunities today, or do we need to wait for some patience? And one of the things that you mentioned that I think is really important would be also is, maybe I don't focus on just one specific stock, but maybe I look to diversify through some ETF. So let's do that. You want to do that?
Yeah, definitely. And it's funny you say that because we just got a question in the chat. Any chance we can do some technical analysis? And one of the companies they spoke about was NVIDIA. And I'm pretty sure NVIDIA is on the watch list that we have here, right?
Yeah. So what David did was he sent me the list of all those companies. He just basically walked through in that horizontal integration, the suppliers and the chip makers and the end users. And we kind of put this this list together, and you can recognize a lot of the names in AMD, NVIDIA, Qualcomm, Intel, Texas Instruments, just to name a few right off the top. But again, then there's some of those ones that you said that I had never heard of, like Synopsys and ASMI, right? Those ones that are crucial in the part of chip making. So those, this is a watch list that I created for us, and I've sent this watch list to David. And David, I believe you will be able to give that to folks through at the end of our session, or you're going to.
Yeah, let's see. Actually, I should be able to create a link to put in the chat now.
Okay, great.
Where people can get access to the watch list.
So while he's doing that, let's look at these bottom three. These are the ETFs. And one of the things I want to just talk to you, when you talk about ETFs, make sure that you go inside the ETF and look at those stocks that you want to represent you, or the ones that you want to invest in, are in the ETFs. And one of the easy ways to do that is just go inside the ETF itself. And what I did is I just clicked on the symbol, and here we see it says constituents. So this is the the SMH, which is the one that you always hear about on TV. And notice that this one is heavily weighted towards Taiwan Semiconductor, that key component of the supply chain. And then NVIDIA, Qualcomm, Texas Instruments, and there are some of the other ones that David mentioned. So this might be the ideal for you if you want to invest in chip manufacturing, right? The semiconductor space. Now, the other one is stocks. And so if we look at the constituents here, again, you see NVIDIA, Texas Instruments, but, maybe not as heavily weighted, towards our Taiwan Semiconductors. Here you can see Taiwan Semiconductors is only 3.5%. These ones, I guess, David, would be more companies that are beyond the foundry, right? The
Yes.
integration companies, right? Those ones are innovating. Now, I guess it's really on both sides, because Lam Research would be on the chip design, right?
Lam Research is a supplier.
Oh, as a supplier. Okay. So this would be from the foundry closer towards the end user, right?
Yes, sir. That is correct.
So that's where you want to invest in that space. This ETF would be better for you. And then the other one that I was looking at, I'm sure there's a couple of others, but these are the main ones in terms of.
Yeah, the S&P as well. This was like really spread out amongst that horizontal integration, right? It's like a little bit of everything, as opposed to SMH, which is more have that foundry at the top and everything else kind of falling off.
Right. It's kind of like you said, it's a sprinkle of everybody. And what I like about this one is, you look in terms of percent of holdings, it's really, it's not equal weight, but you get a nice even distribution. So, if you don't want to have too much exposure to one piece of the puzzle or one piece of the pie, this is definitely one of those ETFs that would give you a nice rounded diversification. Would you agree?
Yeah, I agree 100%, especially again. So that's 3 ETFs, right, that we went over that give you a different level, a different way of investing within the space, right? That SMH has TSM, right, as one of their biggest holdings, right? And then we have this one, the S&P Semiconductor, which is very, 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 very diverse in terms of the exposure it gives you. And then we have SOX, right, that's kind of has the fabless manufacturing companies such as NVIDIA as their top holding. And then we go to the analog companies as well as some of the other manufacturers and equipment suppliers. So I think ETFs are a very good way to look at the semiconductor space, because again, we know that there is so much profit margins within that horizontal integration that usually going through an ETF will give you access and diversification throughout the whole value chain, as opposed to just looking to one company.
So one of the nice things, features that we have at Barchart is when you create a watch list or a portfolio, we give you different ways to manipulate the data. In other words, here's a list of all these different stocks and the ETFs, and this is what is our main view. But we also give you some default views. You can look at technical aspects. You can look at performance. We'll come back to performance in a second. But here's the fundamental aspect of this list, and what we can do is now we can kind of sort this by market cap. And again, I think this is a way to, for those of us who are very conservative investors, this kind of helps you identify, who the big boys are, or those that have the largest market cap. And, you can obviously NVIDIA and Taiwan Semiconductors is at the top of the list. But the one that really kind of interests me is this one that you mentioned before, this AMI. This is a company I don't think any of us have probably even, know about. And yet here we can see it's the third largest in market cap. So I want to hold off on that thought, David. But the other thought I also had was, as we go down this market cap list, is there a value that you could say where we could say, well, maybe some of these companies that have a smaller market cap might be ones that are those that are going to become the big boys in the future?
Very great question. So one that kind of sticks out to me when you asked that question we brought up earlier is Micron. Again, for those who are not aware, Micron is a equipment supplier based out of China. And if you've been following the fundamentals of economics, we know that China has forced themselves into recession for the last 2 years. So this is one of those companies that I would consider potentially undervalued, right? Because of what they've had to go through economically, but also they are a strong company, one of the strongest companies in China when it comes to the semiconductor space. And China, as we know, is trying to make a lot of headwinds in regards to the semi space because they're behind. And if they do at any point have the opportunity, right, to jump into the space and be a leader, right, companies like Micron will be a huge part of that horizontal integration that leads them there.
The other thing I noticed on this list is, under our fundamentals is dividends and dividend yields. Now, I noticed that most of them don't pay much in terms of a dividend or very low dividend yields. But I do see a couple that are kind of outliers. First of all, Intel has a nice dividend yield,
Yeah.
but this was it Equinix,
Mm-hmm.
and
Yeah.
another one I saw was Digital Realty
Yeah.
Trust. Talk to me about these companies who pay a large dividend
Yeah.
and dividend yield. What do they represent?
Yeah, great question. So the thing with Intel is kind of coming a conservative company, right? We can kind of think of them like kind of becoming like a Coca-Cola, right? A company that's been around for a while, that's giving a strong dividend and incentive for shareholders to stay because they offer such a high yield. But for those specific companies you asked, Digital Realty Trust, that is a REIT actually. So those two companies, that one and Equinix, those are REITs. And for those who do not know, REITs function differently than publicly traded companies. REITs, which stands for Real Estate Investment Trust, they have to offer 90% of their returns in the form of dividends. So these are companies that are pretty much they own real estate where data centers are built. That's why we added to this watch list. And these are, again, very good ways in which you can invest within the semiconductor space, not for maybe appreciation, but for those who are looking to build a dividend portfolio within a sector, that an industry that they know will boom and lead us right into the future. I think that's a very good way. Again, we talked about, do we want to just have the people who are mining the gold, right, or the picks and shovels? It's another one.
And you said that AI is going to be consuming a lot of data, so they need places
Storage. Yes.
storage, right?
Storage is going to be
So
huge. It's going to be
so
very huge.
those two companies make sense to me in terms of, I love dividends. I think dividends is one of my go-tos when I look for long-term investing,
Exactly.
especially because healthy companies can pay dividends. But
Mhm.
then we're talking about tech and growth, and so it's a little bit of a different story. So
Correct.
here I've gone to the performance page, and what I've noticed here too is when we start talking about momentum and a lot of tech stocks, which in your introduction you were saying, tech stocks tend to lead us out of market bottoms and usually at the beginning of real strong bull markets. And so there's a theory about momentum that says that if a market can outperform for 3 months, then it's probably going to outperform for 6 months. And if a market can outperform for 6 months, then that could lead to 9 or 12 months. So what I did here
Correct.
is I just kind of looked at all of these in terms of their 3-month performance, and wow, you can see Nvidia right there is almost
Yeah.
doubled in the last 3
That,
months.
that's
So
a crazy return.
yeah, so there's what David is saying to you. So we may be a little bit late in the game on
Mhm.
this wave, but certainly in the long run, we can see the potential gains in some of these stocks. Now, the one thing I do notice, David, though, is if I look at these in terms of, say, their weighted alphas, that might be a little bit left. If you're not familiar with weighted alpha is, that's where we look at the performance at a shorter period of time over a longer period of time, and we give it more emphasis to shorter period of time. And also the thing I notice is that, some of these companies have made some big gains in the last 3 months, but
Mhm.
in terms of their 52-week, right, a lot of them are still
The negative, still recovering from
down.
last
So
year.
there still could be some opportunities in this space because, we're still not even near our 52-week highs or where we were, a year ago. But that also could be a cautionary tale as well, right, David?
Yes, I agree 100% because again, these companies that haven't um, performed as well, right? What's going on fundamentally on why they may not be moving with their industry and sector, right? I think that's very important to be aware of, and that's where you don't take things at face value, right? We have an objective measure such as this, right? Looking at the weighted alpha, looking at the 3-month returns, and we take an objective measure, and what we do is we do our research and our analysis to build a thesis around that objective measure. Then we can make a decision. So I think that's very important to keep in mind, right? We don't take things at face value.
Right. I mean, if I'm looking at this, the perfect example is Intel's up 19% in the last 3 months, but it's still down 32% over last year. Where your, let me see, your AMS one is up 17%, and it's now starting to show a positive year over year performance. Mm-hmm. Now, one of the things about a Barchart member is that we can create custom views. And so what I did for David was I created a custom view. And again, I believe you're going to find a way to pass that on to our viewers. Yes. So what I did here is I just did some technical analysis in terms of looking at these different stocks. And so some of the stuff is just basic. What is the last price? How much it changed? The percentage change on a daily basis. Something called average true range. Now, average true range is a measurement of volatility, and you can use it for a lot of different things. But what I'm just going to use it for is I'm going to try to make this simple because I believe in the KISS method in terms of investing. Keep it simple, right, David? So ATR, what we're going to do is we're going to use this as a measuring stick to tell us when we start looking at some of these stocks, if I'm going to play this momentum or when these stocks start to move, I'm going to use this as a measuring stick. I want to make sure my stock moves at least one ATR as it breaks out, let's say, of a level of resistance. And that would tell me that I have a true breakout and not maybe a false breakout. Correct. Now, the other things that I'd like to look at in terms of technical analysis, again, at a very simple level, is moving averages. I think moving averages are a great tool for us as traders because, in an uptrend, price tends to stay above a moving average. And those times when we see markets that are strong, you will see price continue to move higher above that moving average. And then when price re-engages a moving average, that tends to act as a level of support, which is also another opportunity for maybe to let us to get into the market. Now, what I like to do is look at two moving averages, a faster moving average or a shorter look back period. In this case, what I've done is I picked the 50-day moving average, and I look at the 200-day moving, a slower moving average, or a longer look back. And what I want to see is that the faster is above and both of them turning positive. That to me would be a sign of a very strong uptrend. And this one, the 50-200, is known as the Golden Cross. And so, some of you might have be familiar with this one. So what I just did here is I just said, hey, show me all these stocks that have now done the Golden Cross. In other words, the 50 is above the 200-day, and you can see that would give you a buy signal. Now, there are other, multiple moving averages. There's something called the Silver Cross, is the 20 and the 50. I kind of do maybe what you can call it the Bronze Cross. I don't know. It's the 20 and 100. I just think it's a little bit mix of a short-term, fast-moving average and a little bit longer-term, 100 days. And then again, what we can do is, make sure that we see both of these lining up in terms of a buy signal. If we see a divergence, one's buy and one sell, that could be telling us that there is a change in trend or maybe a change in momentum. The other thing that I put in here is the number of new highs in 1 month, David. And so, how many trading days there are in a month?
In a month, how many trade days? We have 30.
No, there's 30 days in the calendar month, but there's only 20 trading days.
Oh, thank you. Sorry.
If you are looking at a number of highs, and you'll say, let's sort this in terms of Intel, AMD and analog devices, notice that they all have over 10 new highs in 1 month. Now think about that, 20 trading days, new highs. That means that this company right now in the last month is literally making a new high every other day, right? So
Yeah.
these could be stocks that have a lot of momentum. So if I go to something called flip charts on our uh, page, and here you can see here's Intel, and we said it was making a new high every 2 days, and wow, that's a really strong looking trend, right? A lot of
Yeah.
momentum there.
Hmm.
AMD, same. I'm going to see probably a similar picture now in just today, though. Some of the semiconductor sectors did have a little bit of a pullback. Now, that doesn't necessarily mean that's a bad thing. It might actually be a good thing for us. But the point is that looking at a number of how many highs or lows, how many highs in a month could tell you you have momentum. So let's think about this on the other side, right? Notice here we have Marvell Technology, which has only made
Hmm.
one new high in the last month.
Way
Plus,
behind the trend.
right, and both of their moving averages, they're
No.
are down. So what would we, and if we looked at the chart, what would we anticipate? Well, it's not making new highs. It probably is
Hmm.
making a lot of new lows.
Lower lows.
Yeah,
Exactly.
and yeah, look at Marvell. It's kind of been in a sideways action, but this is definitely a downtrend. So again, if this has been part of one of your ETFs, maybe you avoid that ETF that has a number of these stocks that don't look good, or if you're doing individual stock selections, this one is not one that we're ready to make a commitment to because it's still in a downtrend, right? Does that make
Yeah.
sense?
Yeah, it does. And also, you got to think, right? If it's not keeping up with the bullish momentum of its own industry, what's going on with this company fundamental wise, right?
Yeah,
That's
yeah.
something to really be aware of. And if you can go back, if you don't mind me asking and let the audience know, how do we come up with that opinion right on the far right hand side? That
All
is
right,
coming.
so opinion. Barchart does a nice little job. This is not an opinion in terms of, let's say, a stock analyst opinion. What we do is we take 13 technical indicators and we make this like a conglomerate of all of them and combine them all together and give an overall opinion. So of the 13 technical indicators for Marvell, 72% of them are actually showing a sell signal. If I do it the other way and I look at NVIDIA, it's saying that all the technical indicators that we use, the 13 we use, are all showing a buy signal. So again, how do I find that? Well, I can just click on the symbol, and up here it says technicals, bar chart opinion, and there's those 13 technical indicators. Again, these are all just kind of basic moving averages, 20-day moving averages, a combination of 20 with, a medium, maybe some longer term ones, the 50, there's your 100, 100, and 200-day moving average. And if they price is above them, the common interpretation is that is a buy signal. In the case of NVIDIA, that would be 100%. Now up here, what we do offer you, this is kind of cool. Is think of this as kind of like your speedometer in your car, the current strength of all of these technical indicators combined together. The current strength saying that NVIDIA right now is at maximum. In other words, in terms of technical analysis, this stock is performing at peak performance, right? In current direction. Again, that you could maybe think of it like, the tachometer in your car. How is the engine revving? So this car is at peak performance, and the engine is, the momentum is strengthening. Now, if you want to learn a little bit more about how this bar chart does this um, technical analysis inside of learning tool underneath learn under archive webinars, and all our webinars, archive webinars are free to the public, is that you type in strength and direction and you will find a webinar based on how to use that term. Again, we've done one on the Golden Cross, so learning some techniques that using the Golden Cross as well. So there is a couple of webinars in that one. So let's go back to the watch list. One more thing that I want to show you, because it is getting the top of the hour, and I know that there are a couple questions that folks are popping up here, and I thought maybe you could finish up with a final word or two. So let's go to charts here, and what I did was another feature that Barchart have is called templates. And so this is just a template of just a chart, but I created a template for folks, which is a combination of our 50-day moving average, which is in green, and our black, a 200-day moving average, and then where the price crosses over, that is called our golden cross. And for me as a long-term investor, this is kind of like my go-to. I will not invest in a company unless it has the golden cross. The other features that are on this one that I did was volume. And what I love about volume is volume confirms price. So what we want to see when we start looking at some of these stocks that have momentum, not only do we want to see a lot of green days, that means up days, up day volume days, but we also see this black line, which is an average of volume. We want to see a rising volume, and that's also a sign of accumulation. In other words, buyers are coming into the market and putting money to work, and that's a good sign for our stock. When the volume starts to fall below the average, or the average starts to tail off, that might be a sign that the momentum of the market is falling and that maybe price will pull back. And that's kind of what we're seeing with advanced micro devices. I'm sure if we did with the NVIDIA, it would be the same thing. So this is another tool we could do. It's very simple technical analysis, just looking for that increase in momentum of our moving average volume, but also seeing a lot more green days than down days.
And also we have the price channel, but I think on here it's called what? How do we have it labeled here?
We call it the turtle channels. Yeah, and the turtle channel basically, again, there's other ways we can use it, but what I just wanted to do this is show you how we can use this in terms of just a visualization. And some of you might have heard the expression that bulls take the stairs. So imagine that what we're seeing here is this kind of this staircase of our price momentum. And what it represents is the highest price over a certain period look back and the lowest price over a certain period look back. In this case, I used 40 days or 2 months. And what we want to do is think about these lines, these staircases, that when price impulses away above a level and makes a new step, that when price returns to the previous step, old resistance, new support, that is an opportunity for us to look to re-enter the market. A lot of traders have kind of that FOMO, right, David? They fear that they're missing out on something. But we're long-term, right? We're going to hold on to these stocks for a long period of times, right? For several months or maybe even several years. So I don't need to rush to get in. I want to wait for those pullbacks where the price breaks away and then returns. Now, in this case, it came back to our 200-day moving average. But as a trader, I would not be interested in buying the stock until it breaks above the golden cross, which is what we saw here. And it broke out on higher volume, which is a sign that traders are accumulating positions. Now, what is price doing? Well, price is falling back to a moving average that is upsloping, and that moving average is starting to correspond with our previous step, right?
Yeah.
And that would be an area where I would be starting to take interest in adding AMD to my portfolio, because now I have a moving average that supports me, and I also have a former layer of resistance that now is going to become a new layer of support, because I know that traders were buying or accumulating positions that push price up. So remember we talked about the ATR?
Yes, the average.
So one of the things that we can do is we will look at this breakout to make sure this is a true breakout and not a false breakout. Now, I did in my notes, I did see.
I think it was $9 for AMD.
It is $9 for AMD?
I go back. If my memory serves me right, I think the ATR was $9 for AMD. Oh no, it was NVIDIA. NVIDIA was $9. I was one level
below. So AMD was $3.80. If we go back to our chart here, Again, here we can see that breakout, that level was $88.20. So we at $3.80, that would get us to about 92.
Yeah, we got above. Yeah,
We got way above that, didn't we? So
mm-hmm.
that would confirm to me this is a true breakout. But if I look, let's say, at Marvell, who recently had a breakout, right? There's a little bit of a breakout. Again, I don't know what Marvell's ATR is. Well, it was $1.86.
$1.86.
And I go back to Marvell and I look at, let's see what this did, right? So here it went out from 146.50 and it got up to, well, it did get a breakout. So I was wrong. I thought this one was a small
I don't know,
breakout.
but even if you look at the volume, right? The volume also pushed above, but it wasn't as strong though, right? It wasn't
Right.
a strong
And
volume breakout.
was sort of a flat average volume. We didn't see this
Correct.
accumulation, right? Now,
Yeah.
what I do see here is an increase in volume as price is falling down. And so one of the other things we can do is we can use the bottom of the turtle channels as a risk assessment for us. In other words, if I'm in Marvell or I've already attained a position, if I see now price fall to the lower end of the channel, that is probably a good sign that maybe something is wrong with this stock or that it's time to exit the trade. Now, what I do see in the case of Marvell here in this instance is that it has not yet done the 200-day,
No,
50-day,
below.
the
Below
golden
that moving
cross.
averages.
So
Yeah,
it'll
it's below.
still be a no-go for me.
Mm-hmm. Yeah. And I think if you pull up Micron, right? I think Micron is another example of a company that we see a lot of volume falling down. Yeah, right.
And it's what is it doing?
Intense.
It's not really you're not getting those big ATR breakouts above
Mhm.
those turtle channels. So again, even though we've got the golden cross, which would give us permission to start looking to invest in this, right? We don't see that staircasing
Mhm.
attribute of an uptrending market, do we?
No, we do not. No,
No.
we don't. We see a lot of consolidation, right? Sideways trading, if anything.
So again, this is one of the companies that you kind of like, but patients here could say, hey, we either wait for, conditions, technical conditions to change, or again, what you're saying is fundamental conditions
Yes.
change, and those fundamental conditions would then eventually be reflected in our stock prices.
Yeah, because technical analysis is just the move is just the moving of fundamentals, right? That's how I kind of like to think of it.
Yes, it's the market's perception
Mhm.
of a potential greater returns or greater price appreciation over a longer period of time, and what usually drives price is fundamentals. Yes. All right. So I see a question here. It says, are there 13 indicators for opinions on all counted equities? I guess equally. Oh, so it's equally. Yes, it's equal weighted in terms
Mhm.
of the 13 indicators, and we do offer it in all, not just for this one.
And that's actually very important because I think a lot of platforms do not offer objective right opinions, right? A lot of them we go off of analyst opinions, which is subjective. So I think it's really cool that Barchart has integrated right an objective way in which we can evaluate companies, because technical analysis even itself right can be a subjective thing.
It's very, very subjective. And that's why I kind of wanted to make this as simple as possible
Mhm.
for somebody who is new to technical analysis. And that is moving averages, right? When a
Yes.
market is in an uptrend, it tends to stay above its moving average, and volume, which is really kind of confirms our price. Look at here. This is NVIDIA, right? I mean,
Yeah.
you can really see that staircasing event, right? And
Correct.
did the market give you opportunities uh, when it pulled back and tested the recent resistance? Yeah, one, two. Here was a resistance level here that we broke out of, and then we got a retest here again.
Correct.
So
Yeah.
this stock has been doing very, very well, and in looking in terms of our golden cross that happened in the beginning of the year. This is kind of right around when that whole AI thing started to
Yes.
blow up, right?
Exactly. Yeah. Hmm. So a lot of bullish momentum and looking to Nvidia to be one of those leaders in AI, right? So I think that plays a part into the momentum that took place. But again, we got earnings seasons coming up again, right? We want to hear what these companies are saying. We want to hear the innovation they're doing to confirm that move, right? Because that's what's going to be able to have Nvidia maintain the momentum which they have, or right, allow them to correct and pull back to their mean or their average.
So there's a great question Jeff asks us. Do we think that this, and this I'll leave it for you, open-ended to you, but I certainly have my own opinions as well. Do we think that this momentum is going to continue, or has the semi-tech sector done its job in terms of market rotation, and now we might see profits come out of the sector and go into other sectors?
Yeah, in my personal opinion, I believe that we may have run our course earlier this year. I think with inflation still being high, right, and seeing where it was coming out with information in regards to banks, I think it's going to be really important that we understand that again during this economic downturn, even though innovation is high and we're seeing companies recover, right? Is it too much anticipation to what's going to come? Because remember, sometimes we price into the future when it comes into stocks, right? So the future have we already priced in? That's the key, and I think we priced in a lot, right? We can visually see it, right? Because I don't know if this move is validated by the fundamentals that exist now within the economy, and that's where my worrisome comes. I always like to look at the economy first as my baseline understanding, and then I apply that to a company. And does it validate where they're at?
And growth stocks typically do have difficult times in a high interest rate environment, right? Because their potential growth is discounted because of the higher, what we call a risk-free asset. But let's just look at NVIDIA here in terms of a technical aspect. Is right. We talked about our staircase. Well, there was our reach and level of good resistance, and then we broke out above it. Well, look what would happen if price fell from where it currently is in the 270s back to this 235. Well, that would be almost a $40 pullback. Well, in terms of a percentage, what's that? A 15% return pullback in this stock.
Yeah, just about.
Would that then NVIDIA become a more attractive stock for me in an industry that I believe is going to continue to grow? Yeah, it certainly would. Right now it has a lot of positive momentum, but in terms of an investor, this is why we can be patient, right? We don't worry about that FOMO and that how this technical analysis is going to give us a better idea about where we want to come into this market and not kind of this, like you said, chase returns.
Yes, exactly. I agree 100%. It's funny that right when we're doing the staircase that a lot of times these companies are falling right to that moving average. I think that's kind of ironic.
Well, that's what basically I have for you, David. I hope you enjoyed that.
Yes, no, thank you. I appreciate it. And I hope our viewers were able to get a lot of information in regards to the charts, right? What we have. And I put the watch list out for those listening. Please follow me on Twitter. If you go on my Twitter, I already tweeted out a link to that watch list so you can have access to it. And not only that, I'll be putting out some content on Twitter as well as the KP Cares Foundation Instagram page, where I will be walking through how you can create the template that John put up earlier in this webinar in regards to the breakdown in terms of performance and looking at the companies by their market share, but as well as the technical analysis with the Turtle channel. So please look out for that information coming out soon. But John, I appreciate the great explaining you did and showing the utility that Barchart can bring in terms of just not the fundamental aspect that we went over earlier, but also combining that technical analysis, because I think both the two sides of the coin that's needed for us to get the value, pun intended.
The Bitcoin value, maybe. I don't know.
Anyhow. A lot of value, yeah.
Yeah. So all right. Well, my last little bit here is, again, I just want to remind folks that all of our webinars are recorded and can be found on our YouTube page, as well as this one that we're doing will eventually end up on our YouTube page, so you can watch it. And like I said, these are all free. And so you can come here and just type in, a subject matter that you might be interested in. And for instance, the one that I just mentioned to you was, the golden cross, and here's one on average true range. And if you just type in the word direction or strength, you will learn how to use that opinion, market strength and direction opinion indicator on the Barchart page.
Thank you, John. For more information, please follow me on Twitter and Instagram at David M. Torrence, as well as my foundation, KP Cares Foundation, for all information and updates. Thank you, guys. Hope you have a great night.